Morning all, how are we all doing? How many we got in here? 17. There's something wrong with the stream this morning. It was set to private for some reason. Remember, I don't know if you were here last week when I had that stream that went all weird and went rendering for ages, and it was all set to private and something. I don't know what was going on with it. But anyway, I duplicated that stream, and this one got set to private for some reason. So it looked like there wasn't a stream this morning, but there is. So we'll give it a few minutes. Hopefully some more people will come in. But I don't know what happened there. YouTube's been going a little bit weird lately. Not quite sure what's going on. But anyway, morning Yoko, Gregors, some people are here anyway. Monkey, Virginia, JC, Evil, Alan Bay, FT, how we doing? Right, we'll kick off anyway. They can catch up. So today, we haven't got an awful lot. One sec. Sorry. We haven't got an awful lot of news today. Well, I haven't got any news today. It's dead day for news completely. So there's nothing to do today from a watching news perspective, and obviously any impact on the market specifically caused by news. Tomorrow is also a very, very light day. We've got retail for Aussie tomorrow morning, but that's pretty much it. We've got consumer confidence in the afternoon and jolts, which doesn't tend to do an awful lot for the US. Moving into Wednesday, that's the first big day of the week. We've got the Australian CPI. So the inflation figures are coming out for the Aussie, which forecast to drop, which will potentially be negative for the Australian dollar. We got the CPI for Germany. That's a very important one, because Germany and France make up the vast majority of these CPI figures for Europe. So that's a big, important figure. Non-farm employment on Wednesday, and then we've got Canadian GDP, and then in the evening we've got FOMC. So this is the big one of the week. 5.5 forecast. We should get a 5.5. There's very, very little chance, like that small, that the Fed will reduce rates. They won't do that. So whether we need to see what the market makes of that. This is the important part, the FOMC press conference. This is when it will be laid out what is happening moving forward. That's the important part. What we're looking for is, when are you reducing rates? Not if, but when. How much would be handy as well, but it's going to be a 0.25 in all likelihood, but when. So that's the important one. That's the biggest bit this week that we need to be aware of. After that, we're going to get a big move. If they say anything. If they don't say anything, we won't go anywhere. We got the Euro CPI flash estimate, which isn't relevant because we will have got a much better idea from the previous day. Then on Thursday, we've got the Bank of England rate, again, 5.25. We had a deviation on this last time on the rate votes. Oh, no, it wasn't last time. Yes, it was. Sorry, yeah. Yeah, so we were forecasting we had a 306 previously. We were forecasting a 207. We got a 306. We're forecasted to go back to a 207. So we'll see what happens with that. Again, there's no press conference for the pound, but we might find in the monetary policy statement some guidance as to what they're going to do with interest rates and when. We've got unemployment, we've got PMIs, and then on Friday it's non-farm payroll day. So it's the unemployment rate for the US, which is the important thing. They're forecasting that to go up, which is going to be negative for US. So big volatility from Wednesday onwards all week. So front end of this week, very light. Back end of this week, nuts. Weekend news wasn't an awful lot. We got Degendos talking at the moment. So we might see something coming out of that this morning. There wasn't a lot of financial news over the weekend. ECB could cut rates anytime this year. Cheers for that. So yeah, wasn't a lot of financial news over the weekend, but we did have that US base being hit by Iran, or rather, the US are accusing Iran, which massively escalates potentially that conflict in the Middle East. So if that all flares up, stock markets will collapse. The Swiss franc will massively rally, probably the yen and the US dollar. So be aware this week we're kind of teetering on the edge of another conflict. So if that happens, we're going to find very big, fast, sharp movements in the stock market and potentially in the safe haven currencies. Morning, Baggy, day trader, Steve, Christian, Amy. So we've got 3 minutes to the open. So that's your news. Friday banked 0.52. Not a good day on Friday. Very, very, very difficult day on Friday. So DAX got hedged, couldn't get out. Made a loss on the DAX on Friday, which was about $200 and something. FTSE on Friday, there was no trades. The pre-market range was tiny, and then it went nuts. So unfortunately, if you did get on that pre-market range, you made a fortune on Friday. Well done. It's just too small for me to get on, unfortunately, but it broke clean straight up to about 2.5, 3R, and then it just didn't stop all day. So well done if you got on that. NASDAQ, I got out the NASDAQ. It was a triple hedge on Friday with the US, and I got out of the NASDAQ longs and then aggressive exit on the shorts. So that was a nice little profit on the NAS. The the S&P, same story, hedged, exited the longs, aggressive exit, out. Could have got a lot more if you'd have held it. You usually can, but I never do. And same sort of story with, it wasn't a triple hedge, sorry. The Dow was a clean break on Friday. So the Dow was lovely, straight in, straight out, 2R, done. So the Dow was nice. So I got out of the S&P and the NASDAQ in the afternoon. So not a bad day Friday, not great. It was looking pretty crap at one point, but managed to pull it back, which is good. Okay. We'll wait for the open. We've got 1 minute. So Friday on the DAX, we had an up day. Ever so slightly, very, very small increase, not a massive. So we've had a little gap fill play this morning on the FTSE, which is done. On the DAX, which is done. The FTSE obviously had a massive up day on Friday. Really big bullish move on Friday. We got these whacking great propulsion gaps now potentially to test on a pullback. So we'll see where this is going. It could just rally out the highs and be off this morning. So we'll see what happens. But upside and downside targets, obviously, very simple today. For the DAX, you're going to hit resistance there. You're going to hit support there. And with the FTSE, you've got this double top from Friday, which is very, very close, which is the Friday high, which you can see is just there. That black line, basically, because it's last week's high as well. So we've literally got that much room until we're hitting resistance, which is 1.5R. So if it clean breaks to the upside, be aware that you might run into resistance at 1.5. So it might be worth taking a slightly smaller TP today if it does break long, which it has. So we'll see where we go and if we manage to get a break. Very tight ranges today. In fact, the FTSE's, the DAX is too tight. Not taking the DAX. There's only 90. 163 is 10% of ADR. We've only got 90, so that's not even 5% of average daily range there. Bit too tight. Bit too easy to get whipsawed into. So I'll take the 5-minute opening range break on the DAX. Hopefully that is bigger. But the FTSE's broken along. Morning, Neo. Morning, Themba. We'll have a look at the FX in a minute as well. There's no ADRs to look at this morning. There's only one RSI, so there's not an awful lot to look at on that side anyway today. It's going to be this week, I should imagine, is going to be fairly quiet Monday, Tuesday. We'll probably get some movement, but it'll probably be rotational. It's unlikely the market's going to go off in a big direction ahead of this week because we've got too many big news events. Pound and US interest rates and unemployment rate and GDP. I mean, we've got everything this week. It's just it's a really busy one. FTSE just approaching 1R on our way to that high. So just watch this high. This is an all. I think it's it's not an all-time high. Sorry. So yeah, if this breaks today, we're running into this balance, which is like 1, 2, 3, 4, 5, 6 days. 6 days of equilibrium there, where the market was absolutely happy as Larry to trade in that zone. So we've got this propulsion gap, which started this bear run, which is there. I mean, it's quite old now, but it is still valid. So we might find some resistance out of there, but there's tons of areas that you could say are very support resistive on the way up to ADR today. So if it does break, might be a bit of a choppy ride up, but got a break yet. Morning, Astro. Okay, but FTSE's pulling back. DAX is also pulling back. It's not a lot of volume on the DAX at all this morning. Not even going to get a trade on the DAX at this rate. I need it basically to break out. If it doesn't break out the pre-market high and low, the pre-market high-low today is 180. So it needs to put in more than that pre-market high or low. I'm not trading it because it's going to be too tight. FTSE's pulling back. Dead, isn't it? Morning, Harold. Morning, Peter. Come on, move. I think I'm going to get on the DAX this morning. So if you want to if you do want to take a DAX trade today, at the moment, obviously that 5-minute initial cash balance is tiny. The pre-market, the entire pre-market range from 7 till 8 is tiny. So I would look, if you want to get into this today, at taking a pre-market range break. But there's not a lot of it, as you can see. So just watch this area that we've been sitting in. But basically the last hourly candle, and take a break of that hourly candle, really. That's all you can do at the moment. Doesn't look like it's going to be tradable this morning. Doesn't mean it can't take off like an absolute lunatic and make you an absolute fortune. Look at the FTSE on Friday. That was also too tight, but it went mental. Some of the best trades are those ones because you've got such a small risk. But equally, they are very easy for the market just to whipsaw for half an hour and then take off. So there you go. So pre-market range drawn in red, too tight, 140 on for 163. So it's less than 10% of average daily range gone in there. But if you want to take it, feel free. This could well just absolutely scream off. Just because we've had no volume in the first 5 minutes doesn't mean we're not going to get volume this morning. It just means at the moment, no one's got out of bed yet. So either everybody's late for work or they're just not interested ahead of the news this week. And we're just going to get a rotation day. It's earnings fortnight as well. Obviously, this doesn't affect us in the European session as much. But today is the last week. It obviously started to kick off with Netflix and Tesla and a few big names. But this week is really where it tends to gather momentum. And then obviously into next week. So pre-market today, we've got General Motors, Pfizer and Starbucks. And then the first batch of big names comes in after. Sorry, this is Tuesday, not today. There's nothing today. Tomorrow, we've got the first batch pre-market. And then tomorrow afternoon or tomorrow evening after the market closes, we've got the first batch of real big names coming in. Google, Microsoft, etc. And then obviously it carries on from there. So from Wednesday, we've got obviously big movement. But we've also got FOMC. So you've got something wanting to move the market massively, and you've got something not wanting to move the market because they don't know what interest rate they're going to get. So, or they don't know whether the US is going to rally or dump, whether they're going to get cheaper or more expensive stocks. So it's going to be quite a tricky day on Wednesday, I think. But we'll see. But that's your upcoming earnings this week, and obviously going into next week, every single day we've got big names, and then it all starts to calm down into the second week of Feb. DAX, at the moment we're inside bar, and we've actually got a gap. Look, so this shows you how little liquidity we've got in the market this morning. Yeah, we closed there. The next 5-minute candle is opened as a gap up, meaning that there was just no orders available, so we've had to move to get a price filled. So there's no volume at all this morning, which can cause two things. Either you get really big, strong candles, because when there is an order that comes in, the market has to go quite a long distance to actually fill that order because there's not enough liquidity to fill it here. Therefore, they have to search for price. You get big candles, and then you tend to get these big wicks. You get big candles like that because they're searching for a price to fill. They're searching for a price to fill, but they're actually not moving anywhere in price. They're just trying to get orders filled. Or we just sit doing Christmas trees. So we go bull, bear, bull, bear, bull, bear of varying degrees like this for the entire morning. Okay. Not ideal trading conditions. So I think we'll come back to that in a minute. I'm not trading the DAX, but I am long FTSE. I do need to just watch that high from yesterday as well. We just see if we break this high, because if we break this high, we're running straight into yesterday's high. I just want to see what reaction we got off of that, and then we'll have a look at the FX market. Out the lows, pre-market on the DAX. Let's see if we can actually get through that first batch of orders today. This account as well, by the way, is obviously it's running quite small amounts at the moment. I drew out my other account, the US account from DOW&X. I've got the money in the bank now. I've decided not to put it in here at the moment. I was going to top it up into this account because I stupidly withdrew it from DOW&X, then thought, well, why don't I just put it into one big account in DOW&X? Because I was going to move it back into Robo Forex. I still haven't quite decided what to do, so it's sitting in limbo at the moment. So this is obviously trading quite small numbers at the minute, but I haven't quite decided what I want to do with this yet, because the new EA, position trading EA that I'm developing, I want to run that on a separate account first, just in case there's any problems. And obviously I don't want it running on one account that the market reverse alert EA is running on. So I might use that money just to start another smaller account, 20k account or something, to run that EA. Come on. So we have made a new high. So we got higher, high, higher, low, but I mean, it's not really gone anywhere, is it? I don't think we're going to get a move. DAX didn't manage to get out the pre-market lows. It's dead this morning. I'm just going to move TP. Oh, we might get a pop. If we hit this level and the limit orders trigger and there is enough volume to get through there, we might get a pop. Because there's no volume in the market, when it actually breaks through that barrier, it might spring out the highs, which is kind of why I want to watch it and just see what happens, what the reaction is there. If it can pop, it might get target, but if it doesn't get target, I want to take it off there and just bank it, because what I don't want to do is sit in that all day. But at the moment, it can't get anywhere, can it? So, morning, it's time. Morning, a ghost set. Come on, look at the spread as well. Really big spread this morning. They're really searching for orders. No, okay. It's struggling. I'll leave it there for the minute. Come back to that in a minute. Right, FX. So ADRs today. There are no ADRs. Obviously, there's no weeklies because it's first day of the month, first day of the week rather. There's nothing I've had a quick scan through. There's nothing really that's moved dramatically overnight. The Aussie dollar's had a bit of a rally overnight, but pulled back on a lot of stuff. Absolutely no movement on the CAD Swiss. The yen's not done anything overnight either. There is a little bit of strength coming through in the yen, ever so slight, but nothing particularly exciting. The New Zealand dollar's not done anything overnight either, so it's all pretty much middling rubbish. So if you look at everything, the only the only RSI we've got is the Euro Swiss as well. Look, so that is a 4 hour and a 1 hour. So this is still coming down. Look, it's Euro Swiss, beautiful bounce off the 72. Look, so when you're trending, you're looking at the 24.72 as resistance on a downtrend. It's lovely. So perfect bounce. We should be looking for making new lows there. But that's extended to the downside. So obviously it's not going to get there in a straight line. So you've got an opportunity to bounce out of it. I've got one long on from last week on the H1M5 entry, which was there. Didn't get the bounce. We just got a little flag on the move. So we'll be getting into the second entry on that today. Probably in a second, I should imagine, actually. 37, yeah. So I'll be taking a second entry on that there today, or if it continues to push down wherever we get the reversal. So I'll be getting into second entry on that today. But that's all that's extended. There's nothing else to look at today. That's extended to the downside. We're coming down to propulsion. We got a weekly support from 2 weeks ago coming up, which is this previous high, which we came back and retested a couple of times and bounced out of. So there is potential for a little bit of a bounce out of there. So we're looking for a pullback on that leg, then potentially a continuation down. But yeah, so if you look at everything, Euro Swiss is a bit different, but most stuff last week, we didn't go anywhere last week. I was quite lucky to bank what I banked last week because we're still sideways, everything just sideways. And also some of this stuff is even contracting as well. So, you know, no movement last week really of any excitement. Few good trades, but nothing, sideways, isn't it? Totally sideways at the moment. Especially with these yens. These yens are driving me nuts. Euro CAD been sideways all of January and December pretty much. So that is the 1st of December. That pretty much sums up this market at the moment, doesn't it? Not going anywhere. So yeah, everything is really, really weak. We didn't have many RSI extensions. The RSI extensions we did get on strength, most of those have started to play out in some shape or form or have already played out. Nice resistance bounce there at the gap. Look, there's the gap that we identified and the resistance. There's the bounce. So yeah, so all sideways pretty much. Sideways. Little bit of a push out, but not going anywhere. So there's nothing much to look at on FX from that perspective at the moment. So I'll just quickly go through what I've got on. FTSE's back inside the pre-market range. So this is what I was talking about with Christmas trees, yeah? So big push up, rejection. Let's have a go long, can't go. Let's have a go short, can't go. Let's have a go long. What happens? Algorithms just basically getting the orders placed. There's no speculative players involved at all, so you don't get any movement. This is, that's what I said, the wicks. You just get long wicks. No movement. Yeah, price opened there, we closed there. We opened there, we closed there. We opened there. Yeah, so you literally, you're moving that far. You're using any kind of stop loss strategy and you want a 1R on it. Yeah, you're going to wait half an hour to an hour just to even get 1R if you're lucky. It's just wait for it to actually do something before you get involved this morning. If you want to get involved, it's just not going anywhere. Dead. So far, H1M5 mean reversion up 5.83 on the month. Banked 0.16 on Friday. Didn't really manage to bank anything on Friday because we didn't go anywhere. CAD Swiss was all I banked, which was with tiny amount of profit just to get out of it because it was a very big, strong move. We pulled back into propulsion and I just wanted to bank something, basically. I also wanted to reduce my... it was CAD News on Friday, wasn't it? I can't remember. Was it Friday? Lost track. No, I can't remember why I wanted to bank that, but probably just to get some money in the bank because it's been like pulling teeth this week. As you can see, I had one good day last week. Pound Swiss is potential today to get banked on the shorts if we can get a push down to ADR. There's nothing in much problems apart from obviously a good old friend, the pound yen, who is just costing me my entire mortgage in swaps at the moment because it's done nothing for 2 whole weeks now. Looking for that propulsion gap target fill still. We've had another reversal alert. Look how tight these reversal alerts are. Look. Yeah. Distance between that reversal alert and that reversal alert is about a pip. That's about as tight of a range as you can get. A reversal alert into a reversal alert. It's just not going anywhere. The market structure, there isn't any. So that's what I've got on at the moment. So Euro Swiss, that was the H1 entry from last week. So we just flagged and dropped on Friday. So entering second position on that one this morning. Euro Pound, again, just swaptastic at the moment. Just really grindy moves to the downside on this one at the moment. So 4 positions on that, sorry. So average is 150 ADR. So just looking for a couple of ADR hits to the upside, basically, to try and get out of that. We've got obviously the pound rates coming out this week. We've got CPI for Germany coming out. So there's good potential movement for the Euro Pound this week. We've got good catalysts from the news. Pound Swiss, 2 entries on average in profit on that one already. Pound Yen just looked at. Pound New Zealand, shorts sideways for, what is this, 1, 2, 3, 4, 5, 6, 7, 8 days. Can't do anything with it, just in it, waiting for, my target, as you can see, is about 3/4 of an ADR. Can't even get that. I've hit break even twice last week since we got into it. Just can't get anywhere. So that's all I want, an ADR. Just move somewhere. I don't care. Just go up. I don't care if you go up. At least if you go up, I can get in and you can come back down again. Going sideways doesn't help anybody, does it? New Zealand dollar CAD. New Zealand dollar US dollar. Second entry taken last week. Second entry taken this morning on that one. First entry was there, yes. We didn't go anywhere all last week. Got a lovely push and then looked like we were breaking. So I took that position off the second one last week, expecting that. What did we get? Another 2 days of sideways again. So, at average on it. Hoping this is a lower, the peak formation low. We've got the new high gone in there now, and that's the new lower high going in. So looking for a break up into propulsion. We've got loads of propulsion targets to the upside. So New Zealand dollar, no news this week, apart from the Aussie dollar CPI. So we might actually let's tell a lie. We have got news this week for New Zealand. It's going to be off the Aussie. So we've got potential for movements on Wednesday morning on that one. It's retail sales tomorrow, which might do something. But it's the US I'm waiting for on that. And US dollar yen, which is in the same boat as the pound yen. The yen is dead. Sideways. So looking for a continuation push back down on that one, looking for some US weakness, and we're expecting that yen strength to come through, but they haven't rallied it since they said they were going to increase the interest rates, and we're now looking at potentially somewhere in the region of March, possibly. But if that comes down faster, that CPI figure, which is coming down pretty fast, there is a possibility that we might get that interest rate coming down sooner, and they might surprise us by just doing it So their target is 2%. They're coming down at a fair, decent rate. They're closest to CPI target of everybody. So might happen. So yeah, just sitting in everything at the moment. ADR reversals, bank 1.39%, 14% bank this month. Nothing banked today, nothing bankable at the moment. But you can see all the positions I got on there. A lot of it is duplication, as you would expect, because obviously as we get an RSI extension to the upside, that's usually caused by an ADR hit. So both these accounts will get into very similar trades, albeit at slightly different times a lot of the time. So pound yen, New Zealand, so it's all pretty much the same stuff. Aussie New Zealand's the only one I've got on here that I haven't got on the other account, which is a little bit stuck. I took 2 off of this last week so that I banked some, and I was expecting it to continue back down and just do that, and it didn't. It just went into an accumulation, pushed back up again. So took another position on it. So basically just adding the positions back on again that I've taken off and profited from so that I can do the same thing. So I will add again as we get up towards ADR today and wait for that. If it goes into a range this time and we come and retest that low, I will wait and take the whole lot off down there rather than taking a partial on it. But so that one's doing okay. And H1 hedging banked 8% this month. So it's 3.7% of drawdown, nothing bankable at the moment on that one either. Aussie dollar yen I've got on both ways at the moment. So yeah, Aussie dollar yen I've got TP set. Long target high, short target low. Would be lovely to hit one. But as with everything, we went sideways all week. So yeah. Stuck. It's all stuck. We need something to shake the market up. If we get through this week and FOMC doesn't move the market, the pound rate doesn't move the market, unemployment and non-farm on Friday doesn't move the market, I don't know what we're going to do in February, because if we can't get any movement out of that lot this week, it doesn't bode well, does it? This is the whole thing. December, we thought December was flat. January was been as bad, isn't it? And if it doesn't pick up in February, we could be going into summer trading having not moved this year. So it's not looking good at the moment. It's just flat at the minute. Got some movement on these yens. These yens are about the only thing that are actually moving at the moment. Up in there. But you know, not dramatically. So you know, sideways news event, sideways news. That's all we're getting, sideways, until there's a news event that actually shakes the market up. Then we literally might be lucky enough to get a couple of days of movement. Then it's that's it, isn't it? Nothing can get moving. So up, down, up, down, up, down. Old fib. Not want that anymore. Right. So that's FX. Oh, look, nothing's moving. Morning, John. Morning, Kennelly. So yeah, I haven't really got anything else to discuss today. Literally, we're waiting for news. So this week's going to be a little bit meh. So if there's anything you want to look at specifically or discuss specifically, let me know. Other than that, I haven't really got a lot to talk about today because it's just waiting for news week. So anything that I get into around about 0.25% profit, I will put down there. There's a few bits and pieces which I can bank partials on, which I might do. As you see, I've been doing it this week a bit anyway, or last week, you know, just banking a couple of bits just to get something in the bank, assuming that we're not going anywhere. Because if you bank partials like this pound New Zealand I'm looking at the moment, which I spotted there, if this gets down to here and I take that off, if this is going to hold and it is going to push back up, I just put it back on again. So basically what these positions do as you're taking them off, they're basically just paying for your swaps, and making sure that when you do hit that and you get out, you've got a bit of profit in the bank. But it's just like pulling teeth at the moment. It really is. I need to put that pound yen aggressive stop back in place. So I'm just covering that aggressive drawdown control position. I'm going to keep it actually quite tight on that because if we do double top, I just don't want to get spread out on the stopped out on the spread. We've had the reversal on it, so we might well push up and retest before we come down today. But then again, this is holding this propulsion gap, so we might come up and retest these highs. And then if we bounce off of there, I'm going to get that aggressive back on again. But you know, just it is so hard at the minute. I like when you're saying market is flat, it hasn't moved, but you were pulling 15% out. Yeah, but you can, this is the beauty of it. You can. This is the beauty of position trading. Like I said, this pound New Zealand. If this pushes down, that's not the pound New Zealand. But if the pound New Zealand pushes down today, hits that, and then starts to pull back, I can stick $200 odd in. And you just all you're doing is you're building your pot. This is position trading is a marathon, not a sprint. You are literally pulling tiny amounts out the market regularly just to build this pot. And if it goes nowhere, you just build your pot. When it starts to move, then you either go into drawdown and bank properly, or you just bank properly. But you've got to keep banking. But it's just really, really hard. This is why these, you know, this ADR that I, oh no, so it was this one, wasn't it? On Friday, the CAD Swiss. I banked it because I've got no faith in this even trying to do a double top, which I was quite right to do because we just pulled back into a symmetrical triangle. Just because you know, when you hit these propulsion gaps, there's just not enough volume to get you anywhere. So just take stuff. You know, you've got to be really loose in this. This is one of the hardest things I think with traders to adjust to, and this is why people I think struggle a lot in trading, because you've got to be able to adapt to market conditions. You've got to be able to identify that there's just no volume. Therefore, you just need to get out faster. And this is where everybody that has these rigid mechanicals trading strategies that have a 2R are never going to succeed, because if you've got a 2R target and the market is just not going anywhere, you're not going to hit the 2R. You're going to sit in it for 3 weeks. Take 1R this week because it's crap. And if you can't adapt and adjust to that, you're going to struggle because systems don't work in all market conditions. Tight markets like this, where your ADRs are contracting down, you've got to target smaller amounts of money. You get paid by the market. And this is, I think, the mindset problem that people have. You have a job. It pays you daily, weekly, or monthly. You go into trading. Trading pays you when the market moves. You can't say when you get paid. You get paid when the market moves. If the market doesn't move, you don't get paid as much. Yeah? It's not the sort of thing you can pull out $5,000 a month out of. You can pull out when the market has made you enough money to pull stuff out. And if that happens to be quarterly, this is why I pay myself quarterly most of the time, because I'll have crap months, but I know I'm going to have crap months, but then you're going to have good months on top of it. You know, this month is like, was it 28% on FX across these 3 accounts. I've done 8% on New York and 5% on here, 4.5. So I'm up 13. I'm up, you know, a decent amount of money this month. But I know next month, all of these accounts could be sitting on negative P&Ls. So you just take the money when you get the money. That's all you can do. And if you can identify that it's not moving, take it. Take whatever you get, because it's a cow. But until you sit through all this, you never know. You can't adapt. This is what I say. You got to be able to do this. People can't just buy an EA or pick up a strategy and go, I'm trading. You need to have sat through COVID. You need to have sat through a market crash. You need to have sat through a quiet period. You need to have sat through a couple of years of summer trading before you believe summer trading is even a thing. It is a thing. The market's dead. So when the market's dead in summer, you know damn well that ADR is going to contract. So you take those 100 ADR reversals, not the 125s, and you make sure you get out a half an ADR, because it's not going to go 3 quarters. But until you've sat through it for 2-3 years, you won't be able to adapt to it. You've got to spend that time in front of the charts. It's one of those jobs it's like brain surgery and stuff. You've got to spend years and years and years learning the trade hands-on before you actually get any good at it. Back before COVID, when volatility was higher, did you find H1M5 was producing better returns? Wasn't trading it before COVID. So no, I wasn't trading it. I was trading H4M15. Looks like I'll be touting for business down Dock Road for a few months. I don't know where Dock Road is, but I'm imagining you're able to spend some time talking about the strategy for the new EA. There is no strategy for the new EA. It's the same. It's position trading. It's not a... It's nothing different. It's position trading. So it's just using H1 and ADR. Well, it's using, sorry, it's not using H1. It's using RSI and ADR as market conditions, or it's using you pressing the button. That's the main difference between the new EA that I'm building. Is it's built so that you can do what the hell you like with it. Yeah. So if you want to position trade a Bollinger Band strategy with the new EA, you can do. But it's not going to automatically trade it for you. So if you've got Bollinger Bands on your charts, yeah, and that signals an entry for you because the market condition is extended and you've had a pullback into that, and that is your signal. So condition, signal, got to have a condition and a signal in the strategy. You press the sell button there. Yeah, the EA will then take over and position trade that entry. Yeah, position trading is trading a position in a direction based on whatever, flip of a coin. So the new EA, all it's designed to do is to give more flexibility. Yeah. So you got a nice hit to the high, you got a nice hit to the high, you got a lovely rejection out the high there. We broke that low. If that's your strategy and it's a triple top and you get in when the candle that broke the high gets broken, you can do that with the new position trading EA. And if that trade works out, great. If that trade doesn't work out, it will then start to scale into the position. So it just gives you more flexibility, that's all. But it's still the same thing. It's a methodology, position trading. It's not a strategy. It's a way of entering and exiting the market. Yeah. I personally use RSI and ADR as my conditions, and I use market reverse alerts as my entry. But the new EA as well, I'm going to build a market reversal entry into it, but I'm also using obviously moving average entry, so a crossover of a moving average or candle closing over below a moving average as a short, for example, and I'm using pending orders as an entry. So again, you don't have to use most 90% of strategies have an entry criteria which goes with price. Yeah. So if you've got a strategy, most of them wait for the market to go in the direction that you want it to go before a trade is taken. So whatever the signal criteria is, whether it be a market reversal, a crossover of a candle above a moving average, or as the market's coming down, placing pending orders and waiting for the market to go up, or it crosses over a parabolic SAR, or it closes above a Bollinger Band low, or whatever the reason being, 99% of signals are in the direction of price. So if you boil it down and think about it, there really is only a couple of things you need. A nice tight moving average to cross over, or a pending order, which gives you an entry when the market is going back in the other way. Those really are the only two criteria. I prefer market reversal alerts because they are a strong confirmation, because the last batch of sellers has taken control of the market rather than just prices pulling down. Yeah, this is a good example. Price pushed up, price pushed up. If you used a pending order entry there, you got triggered there. Now, if price had pending order entered and then gone like that, you know that the sellers that started their sell order there didn't take control of the market. So that's actually a very, very aggressive entry. A bearish engulfing or a candlestick pattern is aggressive. A crossover of a moving average is a little bit less aggressive because you've got normally a couple of movements in your direction before you get your signal. A reversal alert is a confirmation of definite strength in the opposite direction. So there's only 3 real strengths of signal: strong, medium, and weak. So that's what I'm building into it. I'm building into it my conditions, RSI and ADR, because it's built for me and I'm going to use it. So I'm building it for me. But if you want to trade anything, you can, because it's got buttons. And that's the big difference, literally. It's got buttons, so you can press buttons and take trades. And then just convert those trades that don't work into position. Don't forget, the goal is always to make money. So when you press the button, if the trade works, you take the profit, whatever it is. If the trade doesn't work, we turn it into a position trade. So look at this here, perfect example. Yeah, this was an RSI extension to the upside, reversal alert on the 5-minute time frame triggered there. I got in short, it worked out, I took the profit. It wasn't a position trade. This was a trade. This one, ADR extension and RSI extension, went long, didn't get a second entry because it didn't push far enough, went up, took it off. That's what we want. Every trade, if every trade was that and it lasted 2 to 3 days, I'd be happy as Larry. But that's not real life, is it? What normally happens is that. That's where the EA takes over. That's got nothing to do with it, is it, really? That's a flip of a coin. There's a 50-50 chance that trade is either going to work or it's not. If it doesn't, position trading EA takes over, or position trading takes over. Our job is ideally to get in and get out and be done with it, and not ever have to get into a position trade. That would be beautiful, but that's not real world, is it? So all this does is go, you know, like, this looks like it's pushing up. Let's go long. That's a buy stop. Wrong button. Doesn't matter. It'll trigger. Actually, it might not do because of the size of that spread. Let's just go long. So bought. Yeah. So either this now. So now what I do is, right, I'm going to get out there. If it doesn't get there, take over for me. But the reason for my entry is I'm spotting a W bottom in a range, or a double bottom, or it's just pushed up above the Bollinger Band, or the CCI has just signaled to me, or the MACD, or my stochastics just got overextended twice, or it doesn't matter the reason, does it? Just need something that can handle the problems for you. That's what I'm building, is a problem handling EA, which I have to say has done wonders this month. 9.8 we've made in $6,000 of drawdown, but then again, it hasn't been running. This is a demo account, so I'm just mucking about on it. Testing. But yeah, that's all it does. So there's no new strategy. There's nothing. I'm not introducing anything new. I'm just introducing something more flexible and, more importantly, simple. Because people just are overwhelmed. I had somebody contacting me on, oh, you what? You see that? That's my TP. Not having that. 1.5 hour on the FTSE, position 1, break even second, trail it. Good job I looked at that then. Yeah, I had somebody contact me over the weekend. And this is the thing that drives me nuts. I can understand where they're coming from, but they are convinced that the market reverse alert CA is broken because they kept changing a setting in the market reverse alert CA for higher time frame RSI. And then they kept showing me their chart with the EA running, saying, look, it's not changed. And I told them, first of all, to go to the manual and the video, which is what I always do, because everything is explained in there. If you've read that and watched that, you know. If you don't know after reading and watching that, probably not for you. But would not have it that the fact that he was trading on the 5-minute chart and he changed the 15-minute RSI, the RSI should be showing a different number. No, it shouldn't. Have you read the manual? Yes, I have. Then you should know that you're not going to see the 15-minute RSI on the 5-minute chart. Wouldn't have it. But it's because it's very, very complicated, isn't it? The EA. So I'm just trying to put something out there that hopefully is more, not idiot-proof, simple to understand. Because it is just, this is a bloody complicated way of trading, and obviously I just want to make it simple for people. And cut down on the amount of time I spend talking to people about stuff. It's just too much. Too much. So have I ever used tick charts? Yes, for futures, but you can't use tick charts on anything but futures. So, but yeah, no, I don't. I do. I have, and I when I've last traded futures, I used tick charts as well. And 1 minute charts. Pound Swiss coming down nicely. But yeah, just for futures. But if you're not making money because the market is going sideways, the banks and institutions aren't making money. Doesn't that worry them? No, they are making money because they're moving up and down, aren't they? Don't forget, when the banks... So there's two ways that banks make money. Well, but the market moves because of the banks, right? So the banks push the market up. Included in that push are multiple types of orders, commercial orders, speculative orders, and there's other orders in there as well. And there's market maker orders in there. There's all sorts of orders in there. But the reason that pushes up is because all of these orders are pushing in the same direction. Yeah. The commercial orders are quite often long-term, so they won't be pulled off. The market maker orders are usually long-term to provide liquidity. They won't be pulled off. The speculative orders are there to make money short-term. They will be pulled off. So if you get a market move that distance and 1/3 and 1/3 are not coming off, what's it going to do when these guys take profit? Pull back by 1/3. Then a new leg will start up, or a new leg will start down. You either get an A-shaped recovery or a market structure. What we're getting at the moment when the market's doing this: A-shape, V-shape, A-shape, V-shape, A-shape, V-shape. Markets are still making plenty of money. They're just not directionally biased. They're still making money. They're pushing it up. They're taking it off. They're pushing it up. They're taking it off. Push, profit take, push, profit take, push, profit take, push, profit take. They're still making plenty of money. Trust me. It's just that there's no reason to take anything in a direction. A lot of the market movement you see in FX, quite a lot of that is hedge positions. And you are basically hedging a position into the future. So I use the example of Japan exporting to the US. By the time those goods have left Japan and arrived in the US, and that invoice has been triggered and that invoice has been paid, it could be 3 to 6 months. So the company in Japan that sells the goods has a fixed cost. By the time the payment is received, that FX exchange rate could have gone all the way down there. So that company that had a fixed cost and charged a set amount of money is now receiving way less for their product. So what do they have to do? Hedge the possibility of the FX market dropping before their invoice is received. That's a hedge. So they will go long US dollar yen when they're exporting and vice versa. So there's no reason at the moment for an awful lot of hedge money to be put into the market, because it's not going to go anywhere while interest rates are stable. So you get contraction and sideways movement. There's nothing you can do about it. It will move. It will kick off at some point, but we're waiting for someone to make a move. So the market until then will be in what we call rotation, or you call range, whatever you want to call it, but it's, or balance. The banks tend to call it balance. Intraday traders call it rotation. FX traders call it a range. Whatever you want to call it, it's basically equilibrium. There is no reason for us to transact any higher or lower. So we will carry on transacting at this level because everybody can make money. Nobody has any excess risk on. Carry on. If you can make money with very little risk, it's much better than making money with high risk. All the time they can do this and keep this going, like that New Zealand dollar CAD. No, New Zealand dollars, what was it? All the time they can do this and make an absolute fortune for 2 months. Yeah. So this is December, beginning of January. Yeah. Oh, we've had something change. Okay. All money making. All of this is money making. But there is no reason for the New Zealand dollar to be any weaker than the Swiss franc, and there's no reason for the Swiss franc to be any stronger than or weaker than the New Zealand dollar Swiss. So you go sideways. Why? Because neither of them are changing their interest rates, so they're both as attractive as each other. It's a sideways movement. That's how it works. It's just the trick is predicting when that movement is going to come, which is as we know, the virtually impossible part. Pound CAD could be good for a trend continuation. I don't know. A trend continuation is on what time frame? Not trending. If you're looking at a daily chart, looking at a 4-hour chart, it's contracting. Looking at a 1-hour chart, just putting in a lower high. If you're looking at a 5-minute chart, going sideways, I can't see a trend. I can see a very weak trend on the M15, which is weakening. I would say probably rolling over. Flip a coin, get in, see what happens. Lee, mate, you are a legend. Thanks for your world-class trading and true word. Lots of love and blessing. Thank you, Tommy. Sound like an agony aunt. Okay, we are so to our hit on the FTSE. DAX seems to have broken out of its low, but not really. Yeah, it has. It's broken low. There you go. This is what I was talking about. Christmas trees. Look, red, green, red, green, red. Another bit of red. Finally broken out, but couldn't really go anywhere. Probably go green next. Waste of time. Good chance of TP on this today. I actually banked something. After you use, say, a Bollinger Band to enter, what does the EA use to enter new trades on that position? Just length of move or extension? Yeah. So exactly the same as position trading. You select how far you want it to go. So you can see this trade I just took here. Yeah, went long there. That is the next long position. Anywhere below that price, it will take the next long. And this is set to... ADR is 967. I think this is set to 0.1. Yeah. So I've got it set really, really tight for testing purposes. So this is 1/10 of an ADR. So if you'd set this normally, you'd be using half an ADR, 3/4 of an ADR or something to scale in, depending on the time frame you're on, obviously. But so that's 0.1 ADR. So if I reset that to something like normal, which would be, let's say, half an ADR. And then if I just, where are we? Pound CAD. Yeah, so now there's your next long position. All the way down there. So that's now half an ADR. So that will be 45, 6, 7, about 48, 49 pips. 47, yeah, 47.48 pips. So it's a grid trading system. No, it's position trading, AZ. Where's there a grid in that? It's position trading. It's exactly the same as the market reversal at CA, right? So when price moves below this level, this is meant to be simpler than the market. Is this not getting simpler? Because the idea of me building this is to make this simpler, not more complicated. Right? If it pushes down below that level, we wait for a signal to go long. At the moment on the market reversal alert CA, that would be a reversal alert. On this one, it can be a reversal alert, a moving average cross, or a pending order. But we are price has to be below this level, and then we wait for a signal to get us in long. So if this thing decides to go boom, 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 and the first bull candle you get is there, that signals a reversal alert, that is where your second position will be entered. Not here, here. Exactly the same as the market reversal alerts. When you say below that level, what is that level? Percentage of ADR, I've just said that. Exactly the same as the market reversal alerts. Nothing's different. I'm confused, Easy. I'm worried because this is really simple stuff. This is the market reversal alerts EA. Yeah, except instead of not drawing a line, it's just drawing a line to make life easy. This should be making life easy, not hard. Sorry. Can't win. It's just the same thing. It's the same thing. I'll do a video on it when it's done. But for now, I'm shutting it. So if you enter on an ADR extension or an RSI extension, it trades exactly the same as the market reversal alerts EA on full auto. Yeah, it's just got a button now if you want to override it. That's it. If you enter like you can let RSI or ADR extensions take over. Nope. ADR and RSI extensions are only used on the very first entry. They become moot after the first entry. They're ignored. After the first entry, whatever the reason for that entry, we just position trade, which means if the price pushes against us, our goal is to move our average price, move our price. If we get in there and price pushes down to there, I don't care about any indicators. I just want to move my price down so that when it comes up, I can get out. My goal is there is no signal, there's no condition, there's nothing of interest whatsoever. As it goes down, I want to get in and move my price so I can get out. That's position trading, yeah? I got in here. Price pushed up, so I got in again. I moved my price up to there, and now I can get out. Yeah, there was no RSI extension there, above there. There was no ADR hit. There was no reason to get in there. There was a reversal alert. The sellers started to look like they took control. They got beaten up, pushed back again. But at that point, there was a signal that the sellers were starting to take control of the market. That's why it got in there, because it's more than 3/4 of an ADR away, and we had sellers take control of the market. I couldn't give a monkeys if the RSI was down there or there or up there. We couldn't give a monkeys if ADR was up there or it was there. Doesn't make any difference. I'm in. I'm short, so I need to move my price because I was wrong on the first entry and wait for the second entry to get me out. As you can see. Position trading. And now I'm going to close it. So I've got 1/4% of profit. It's probably going to push down to target, but at the moment, it might. Look how long it's taken to do this. 6 days. So if it's now going to put in a new lower low and it's going to put in a lower high, could take 2 days to get all the way back up to there and then another 2 days to come down to here. I can't be asked to wait 4 days, so I'm just going to take it. My choice. 1/4% banked. Make sense? That was the position trading bootcamp. All 12 to 14 hours of it in 30 minutes. Right. So if you enter as I have a MRA on H1 US dollar yen. Yeah. I think I'll enter both another short when it tests that level. If you want to. So basically you're saying you're going to take a retest. Yeah. So you'll be getting in somewhere up here. I don't know if it'll work or not. It's absolutely fine. So basically you're doing a multi-time frame reversal alert entry. So what you will do is you will wait for price, get above that line, and then you take a 5-minute reversal alert short at somewhere in there, which means you'll be entering on the second leg of the drop. Nothing wrong with that. If it doesn't work and it pushes up, take another one up there, move your price, wait for market to come down. That will do. But this is, do you see what I mean? There's, yes, that might work. No, it might not. If it doesn't work, what do? Turn it into a position trade. If it does work, what do? Take the profit. Yeah. So if you were using this one, right? So we're on the H1 chart. Okay. We've had the reversal alert there. Okay. So what I would be doing is, there's your reversal alert. There's your high. So what I would do is drop down onto M5. When price gets into this area, yeah, I'd wait for a cross below the 9MA or a market reversal alert, or I would get a pending sell stop entered underneath the candle low and wait for it to trigger the order. Or I might be going off making a cup of tea, come back, or walk the dog, come back, open up this chart and go, yep, we're in the zone. Price is coming down. I'll just hit the sell button. Now that trade will either work out and I will manually set my TP, or it won't. And in which case then the EA will take control. This updates on candle. So if I just do that and that will show the new entry. Or will it? What did I set it to? Half an ADR, didn't I? This is a development version. Oh yeah, no, there you go. Next short entry's there. So basically, if that doesn't work, it will wait half an ADR and then repeat the process. Exactly the same as the market reversal alert CA would do for you. But you can do it manually, obviously, with this. Morning, Evans. GBP blessings. Why? What's so blessings about the pound? Oh, it's coming down. Yes, I've just got out of pound Swiss. Too early. Always out too early, but I really want the pound yen to come down as well. Pound New Zealand's coming down. Pound Swiss, H1 RSI extension. There we go. So 9 o'clock. So we have a new RSI on the pound Swiss. So getting exhausted, getting ready for a long. So I've just got out this pound Swiss today. So if we get an ADR push and we get down to here today, I should be getting long on it. If it obviously pushes down further, that is. Which means I'll be taking the next 5-minute reversal alert long. Although it's not extended at the moment because it's only at, oh, no, it is extended. No, 75. I need 25. So it's not extended enough. So I need another hour of push on this. If we can get another down candle on the hourly, I shall get an extension on this, and then I'll be taking a 5-minute reversal alert. But we'll actually probably be at ADR by then anyway. So it'll be an ADR reversal as well. So this account will also take that one long if it's not already in. So if this gets down to ADR, getting in on that one as well. I just realized oh yeah, no. I've just banked it on this one as well. So the ADR reversals I've just banked. Which account did I just manually close this out on? I've completely lost track. It was this one, wasn't it? Yeah. All right. So that was my target on the pound Swiss. Yeah. Okay. So on the ADR reversals, banked 0.34. The target on that was there because I'd already banked a partial on it in case we got a bounce out of here. I was looking for a potential bounce out of there if we're going to stay in a range. So I took a partial on that. So that's the reason that one's closed out with a little bit less money, because I've already banked half the order. So 0.34 bank there. But yeah, coming down nicely, the pound today. Apart from the yen. The only one I really, really, really want to come down So this yen obviously is weak. If the pound is dropping hard and the pound yen is not dropping, it means that the yen is weak, which means obviously a week against a week gives you nothing. So as you can see, the US dollar yen's pushing up, Aussie dollar yen pushing up, CAD Swiss pushing up. So really weak yen today again, unfortunately. It's law, isn't it? The one day I would really, really like the pound to collapse and the yen to power up on the same day, we get the pound dropping and the yen dropping at the same time, which means we don't go anywhere on the pound yen. Just my luck. So yeah, all good. So if you are short on a pound, which you should really be short on the pound because it's had a nice big push of late. So most of the orders you will have got in will be shorts on the pound because of the pullback on the longs. Right, that's all I've got for you today. So DAX, no trades. DAX has fallen out of bed 2R. So if you did take the pre-market range on the DAX, as I said earlier, you got the break short, obviously, but then you sat around for half an hour. You've now got your payday, so you're out 2R on the shorts. FTSE, I got out too prematurely there, but I wasn't going to have that take me out. Missed me by a pip. So banked that. Second half is a runner. So on the second half long, it's ADR for me, basically that high. That support resistance area there. So that's TP2. So if it can get a decent run on today and not pull back 2R, there's a chance I might make some money on it, but I suspect I'll probably stop out because the volume's just not there today. So, and we are rejecting that high, look. So on the hourly, look, we have tried to push. Sellers have pushed back, basically back into Friday's range. So this may well be just a false breakout. We're going to come back and retest these lows, in which case I'm just going to close it out with very small profit today, but we'll see where we go. Thanks for subscribing, Mr. Kimmy. Welcome aboard. Right, that's all I got. So I'll be back this afternoon at 2:20. Back tomorrow morning at 7:50, same time. There's no news today, so just carry on as normal, basically. Just bank anything that actually does move. Any of these moves that we're getting, bear in mind, obviously, with all this we've got this week, you do sometimes get a rally into the news. So the market will start to unwind its positions if it's got profit, or enter speculative positions in the assumption that we are going to get the result. So you can get decent movement. And this is sometimes where you get these midweek reversal moves coming in, because a lot of the interest rates do come out Tuesday, Wednesdays, Thursdays. So those midweek reversals are happening because that's where the news is positioned, and we're basically just rallying into it and not getting the result that we're expecting. So we might get some decent movement today and tomorrow, but we also might get big, strong move, big, strong undo, big, strong move, big, strong undo. So we'll see. These pound moves that we've got obviously are fairly strong so far this morning, but we could well find they just push down towards an ADR, and then we're back up where we were tomorrow in preparation for the news coming out. So there might be some good ADR reversals, but if you get stuff that puts itself into profit for you, it's probably worth getting it in the bank. Worst case scenario with this one, for example, if it pushes down to there and I take that off, if it pushes down, happy days. The rest of it goes into profit. I just don't make as much money on that position. If it pushes up, though, I get an opportunity to add it again. So I bank that, and then I'll bank that again later. Double bubble, which is great. But so yeah, just the way this is going at the moment, just bank what you can when you can. It's my advice, really. Just take profit. Okay, so I'll be back this afternoon. We'll have a look at the New York session, see if we can squeeze something out of New York this afternoon. And anything you need, I'll be in Telegram. And I'll be working on the EA this morning. So I will see you guys either this afternoon. If not, tomorrow morning, next session. Have a good day.